Now, what stocks do I think will do best in 2026? Then we'll get into how to make money regardless of what happens in the market in 2026. Okay, you ready? Let's go. Adobe. Adobe first up. Okay. This stock has been horrible the past 5 years. No other way to put it. 27% down the past 5 years. You might think the company's done bad. No, the company's done amazing. Look at where the company's revenues were 5 years ago. Look where they are today. Look where the company's earnings per share were 5 years ago. Look where they are today. I believe Adobe's a 20% plus gainer in 2026. That is my personal opinion on that. I believe all this negativity around the stock here in 2025 will all alleviate in 2026, and people will give up on the bearish narrative, just like they did what stock? Google McDougal. Google McDougal had a million questions, blah, 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 blah. And finally, people gave up on it, and what happened to Google? Took off like a rocket ship. I believe people give up on the negative angle in Adobe as the year goes along. It's not like it'll be all the very first day of the year. No, it'll be as the year goes along, the bearishness around the stock will conclude, and then it starts to move up. And I believe by the time it's said and done in 2026, it'll be a 20% plus gainer. We'll see. Next up here, Salesforce. Another stock I expect to be a 20% plus gainer in 2026. The growth rate will start to accelerate at Salesforce. I think that's going to get a lot of people very excited. I think they would be more clear about Agentforce and what that means for the future of the business model. I think by this time next year, you'll have very solid numbers out of that and starting to show that it matters significantly. And I think that's another stock that's caught up in a very negative narrative around it right now about being disrupted and blah, blah, blah. And I think eventually people realize that they're not, and they're actually being a beneficiary of the AI wave, okay? 20% plus gainer, in my opinion, in 26. Next up, Fubo. Fubo, $2.50 stock roughly today, right? I believe this stock comes back to life in a major way, because what's going to happen by this time next year is everything's going to be very clear for Fubo. Revenue growth, where's the profitability at, the margins, the strategy. Since they just completed the Hulu deal, there's still a lot of confusion about what that means, what's the future of Fubo, all those sorts of things, right? I believe that people will realize that Fubo's here to stay, and they're can become a huge player in the streaming space over the coming years, and the stock comes back to life in 2026. Next up, The Honest Company. It's a $2 chuck right now, right? I believe this stock exits 2026. Guess where? $4 to $6, in my personal opinion. $4 to $6 is, I believe, where it exits. There's another stock that I don't think people understand well right now. They're very focused on, they're getting out of some businesses that basically are kind of money losers for them, bad margin businesses, and they're doubling down the business on good opportunities with a great balance sheet. And Carla, that's done a phenomenal job running the company since she came over when it was looking like it might go bankrupt. They've come a long way. And so I think the stock exits somewhere between $4 and $6 in 2026. And I think people will realize, okay, they're here to stay, right? Next up, PayPal. PayPal, I believe this is a 20% plus gainer in 2026. PayPal, some people are saying they're trying to become a bank, and they might. The moral of the story is PayPal's got great numbers. They should continue to put up very strong numbers. And this is one I think people have more of a clear vision for in 2026 and beyond. And guess what? Let's say they become a full-fledged bank. The valuation's already at dirt cheap prices. It's at a forward P of what, 10, 11, 12? Where are we at forward P-wise? 10, 11, 12, somewhere in there? Dude, that's like legacy banking area. Horrible, horrible. And so the moral of the story is in regards to PayPal. I believe that's another one. Basically 2026 is a year that I believe a lot of these dead and forgotten stocks come back to life. That's what I believe. It's like they come out of the casket. Like the Undertaker back in the day, right? Estee Lauder, EL, next up. I believe this stock exits at $140 plus in 2026. I believe they're going to continue to show growth in the business model. The margins will continue to come up. The EPS will continue to come up. And Wall Street loves this stock. They didn't have it in the last few years because the numbers, they were bad, right? They got the strategy on point. Looks like they got social media back, kind of understanding that on a higher level and understanding they can't just rely on department stores to sell their product, right? So I believe the stock exits 140 plus. AMD. I believe the stock exits 2026 somewhere priced between $250 and $300. We'll see where it exits this year, but it should be just over $200 to exit 2025, right? So 250 to 300. I believe by this time next year, they're already going to be showing the insane growth rates. People understand AMD is a real player, and they're going to continue to put up numbers. And their numbers are going to be much, much better in 27 than they were in 26. And 26 is going to be very impressive numbers. So 250 to 300 exit, in my opinion, in 26. Nike. 20% plus gainer, in my opinion, for Nike in 2026. The company's already started to turn around the business model. I believe that's going to continue to show in 2026 as we get those numbers out in 2026. And so I believe you'll look at Nike January 1st to December 31st of 2026, and you'll see that stock be well over 20% plus gainer. Celsius Holdings, CELH, energy drink company, should exit the year somewhere in the low to mid 40s. I believe this is a 20% plus gainer in 2026. Elf Beauty, I believe this stock exits 2026 at $100 plus. Okay. Now, an important thing to understand before we get into some stocks I'd be careful of, and then, how to make money in this market regardless. The thing about those stocks I just ran you through there. Okay. Those stocks, let's say a lot of them do that 20% gain. I think they're going to do 30%, 40%, whatever. Okay. Listen, those stocks I just ran you through, those don't move the market. They don't move the market. Those are beaten down dog stocks. Some of them are, billion-dollar market cap, few billion-dollar market cap. Some are in the tens of billions. Some might be a couple hundred billion. They don't move the market. So even if those stocks do very well in 2026, like I think they're going to do well, that does not magically move the market. If you want the market to go up 15%, 20%, 25%, you know what stocks you need to have go up significantly next year? Apple, Microsoft, Nvidia, Google, Meta, Amazon, Tesla, Broadcom, those sorts of stocks, okay? Walmart, Costco, go on the list. Those are the big dogs. Those are the ones that actually move the market. The stocks I just ran you through, they are not moving the market. Even Adobe and Salesforce, if those are 20% plus gainers in 26, like I think they're going to be, guess what? That's not moving the market. It's just not. And so that's why I have modest expectations for the market overall in 26, but yet I'm expecting many of these stocks to do phenomenal, absolutely phenomenal, okay? Now, some stocks I'd be a little careful with, in my opinion, in 26 is these three stocks like these that had been the big runners the past few years, stocks like Palantir, stocks like Tesla, stocks like Oklo. I'd be very careful of those in 26 and beyond over the next few years. Those stocks were the big runners. They got insanely rich valuations, and doesn't really matter what happens with their business models over the next few years. I think they're got problems ahead in regards to valuation. The businesses are fine. They've got valuation problems in a major, major way now at this point in time, and that makes it not the play in 2026 and beyond, okay? Next up here, how do you make money regardless of what happens in this market? It goes down, goes up, whatever. I'll tell you how. It's called dividends, baby. Dividends. So in my portfolios, I have a strategy, GVD, I call it growth value dividends, where I'll invest in growth stocks, value stocks, dividend stocks, everything serves a purpose, right? And when it comes to dividends, I'm constantly having money pour into my portfolios, my private portfolios, my public portfolios. Money's always pouring in because I always have a bunch of dividend stocks that are always paying me out money. And so regardless of what happens in the market in 2026, I don't have to take any profits next year. This year, I've taken an insane amount of profits, which is part of the reason I'm holding $1.9 million of cash, right? Because I owe the IRS a lot of money for a lot of profits I've taken this year. With that being said, I don't have to take any profits next year, and I can still have money pour into my portfolios from all the dividends I'll be receiving from all my different stocks I built up over the last, 17 years, right? And so that's something to keep in mind. When you start with buying some dividend stocks here and there, the first 5-10 years might be sleepy. But as the amounts in your portfolio gets bigger and bigger and bigger, it starts to really be significant. In 2026, I should easily clear 5 figures, if not multi-5 figures worth of dividends received, right? Without ever having to sell a stock. I should likely make multi 5 figures just in dividend income, right? I'm able to then deploy that money into stocks out there. If the market's going down, great. I get to buy at significant discounts. If the market's doing a kangaroo, there's plenty of opportunities out there. Market's going up, I'll find opportunities as well. Whatever happens, dividends are there to help you, right? And you want to see the ultimate, as far as the dividend master, right? Look no different than Buffett. Warren Buffett's company, Berkshire Hathaway, they now make over $5 billion a year in just dividend income. Imagine that. Coca-Cola alone, that's a position they really started back in like the 1980s. Coca-Cola alone pays them almost $800 million a year in just dividends. It's incredible. And so understand, when it comes to buying dividend stocks and starting to build your portfolios, with some good dividend stocks in there, the first few years might look lame. But as the amounts grow bigger, as your portfolio grows bigger, as the dividend increases come, your companies make more profits, they up those dividends, right? You hold as the years tick on. The next thing you know, all of a sudden you start making significant amounts of money. If I looked at my dividend income 10 years ago, 17 years ago, 15 years ago, it was very modest. Might have been $100, might have been a few $100, right? And now, fast forward, 2026, don't be surprised if I make multi-5 figures of dividend income. If we fast forward another 10 years in the future, don't be surprised if I'm making 6 figures plus a year, if not multi-6 figures from just dividends. That's an important thing to understand, right? Now, the other important thing to understand is think about 2036, think about 2046. 2026 is going to be a year. It's going to be a year, just as 2027 will be, 2028, be 2029, 2030. At the end of the day, keep in mind, don't get too focused on this year. Focus on what's coming over the next decade, 2 decades. Where's the stock market going over the next 20 years? I hope you know.
Hey, it's Jeremy. I hope you really enjoyed watching that clip here today. What you're looking at in front of you right there, that's 1000xstocks.com. That's my advanced software that I've been working in the background creating for a long time. This software is so much more advanced than what others are presenting out there in the market. And as somebody that's been in the market 15 years, I want to create something that was simple, that had exactly everything I needed to make my judgments on companies, such as forward P ratios, 2-year out forward P ratios, price to sales ratios, forward price to sales ratios. I wanted the ability to be able to compare different companies versus each other. I wanted to be able to compare a Meta versus a Google versus an Apple and be able to see all those different metrics laid out all next to each other. I wanted a service that I could listen to conference calls right through and even be able to toggle and adjust the speed I wanted to listen to those conference calls. I wanted a service that I could search SEC filings right through. I wanted the ability to do that all in one service, and that is exactly what I've created with 1000xstocks.com. If you want to apply for access to this, go to the description area of this video. You can click that link and go ahead and apply for access to this. If you don't want to do that, you can go to 1000xstocks.com. Enjoy.
All right, next one up here. Let's react to some Wall Street. It's 8,000 S&P 500 next year. Oh my gosh.
Brock Valekos. It's good to have you. It's been a minute. It's good to have you back.
Thank you for having me, Scott.
Let's just play off of what we just got from Bostic, and he's not going to vote. So it's sort of moot unless he represents a more hawkish side of the Fed. You suggested, you're bullish for next year, that if the Fed eases further on the back of improving inflation dynamics, S&P could go past 8,000 next year. That's a pretty bullish outlook.
Yeah, so that's we're thinking of that more as an upside scenario, and that would be contingent upon the Fed easing more than just one more time, which is part of our base case, and that's why we sort of put in 7,500 as our base case, driven by a Fed that eases one more time and then basically goes into prolonged pause. If inflation dynamics do come in better than expected or better than feared, I think in that case it does open up the left side of the distribution for the Fed in a bigger way, and I do think that risky assets benefit from that.
Are you not a big believer in the whole run it hot trade, that the Fed is going to be cutting, whether it's one or more times, into a strengthening economy, not a weakening one? Thus, the market should be primed to do pretty well. Your 7,500 base case is a single-digit return next year.
Yeah, I mean, I think the economy should be in good shape next year, but I also think it's a K-shaped economy. So I think there are certain segments that are running very hot, but I do think at the same time there's other segments that are actually quite lackluster. And I do think that interest rates could help, ease various parts of the economy that are under stress.
What do you make?
Wait a minute. Wait just a minute. Hold your horses. What areas are really running that hot in the economy? Okay, the AI demand, right? Okay, the chips from NVIDIA and AMD. Okay, running hot. Fair. What else is running really hot in this economy? Housing? Oh, no. Housing's cold as ice. Autos? No. Auto sector does not look like it's going through some hot phase right now. What else do we have here? Retail? No, some retailers are doing well. Some retailers are doing horrible. Like, that just is what that is, right? Last time I checked, it was just like a month ago or so. Like, Target was at like multi-year lows. So it's not retail that's doing amazing in this economy. Construction? I mean, construction's okay. I don't know if it's necessarily like, boom times for the construction sector. Maybe in regards to AI data centers and that build out, maybe that is, right? But overall, big projects, I mean, it's okay, but I wouldn't call it like, super hot. So you run through it, furniture? No. Like, you just keep running through it, and it's like, where's the super hot things in the economy? It seems to me like everything's either okay or like not okay. That's kind of what it seems like to me. Yeah.
Of the whole broadening idea, this, obviously what's taken place lately, there's anxiety over AI, and then all of these other areas of the market have been doing well. Is that a moment in time, or does that...
Even a lot of the restaurant stocks been very, very weak in regards to their earnings. So even if we look at that sector, like that's been weak. Travel, some areas been good, some areas haven't been good. It's really a case-by-case basis. Las Vegas Sands been doing well. They got a lot of properties in Macau, great property in Singapore. Wynn's been doing pretty good, but they really cater to the high end. But in terms of Vegas, my city, I live in Vegas, in terms of, strip visitation, it's actually been horrible this year compared to last year and many other years. So, there's just not really many areas of the economy that are really even hot.
Persist.
So I think the AI trade is going through a bit of a digestion and a pause, understandably so, because it has been...
Oh, you guys want to know how to make so much money? You want to know how to make so much money? Listen, become a handyman. I swear, we've reached out to so many handymen, and they're all so busy, it's ridiculous. Like, they have to, like, put you on, like, a backlog. And we've spoken to several of them. It's insane. It's insane. Like, no one, like, looks at, like, being a handyman as, like, no, trust me, like, you could do very well for yourself. That might be the next play. Like, I know people talk about also being plumbers, electricians, like, making big money. Become a handyman. Just learn how to fix everything. People always need a handyman. You get your name around. Next thing you know, oh my gosh, you have more customers, more business than you know what to do with. Literally, like you want a handyman in Vegas? Get in line. You might be waiting weeks.
So hot, throughout much of 2025. I do think that you're seeing definitely pockets of broadening out recently. And we do think the broadening out could continue to run its course, but really only tactically short-term into 1Q. You could have some of these like positive seasonals as in sort of bottom fishing beginning of January. You guys just talked about like a bit of a fiscal thrust kicking in from the OBBA side that could help the consumer. So I do think there is a number, and then I think various parts of cyclicals, if you will, or value are trading trough and trough when you think about multiples and earnings. So you could get a bit of a lift.
Like what?
So let's say parts of consumer, like low-end consumer has been really beaten up a lot of these places. You think about cruise lines, restaurants, the Las Vegas Strip, so...
Hey, Las Vegas Strip.
Lately, right?
Recently, yes, but they're coming from very low levels.
Yeah.
So that's what I'm saying, like, Home Depots of the world, like you think about like home improvement, parts of housing. So I think these areas could see a bit of a lift, but I would argue it's probably more of a tactical lift. Q1 story, as we think about the medium term 2026, we still think the big story remains centered around AI, where we think big tech hyperscalers remain very well positioned. Utilities we continue to like. Big banks we think are pretty large beneficiaries.
Home Depot, wasn't the stock 350 like years ago? I feel like Home Depot, I swear I remember that stock used to be 350, like a long time ago. Let me see HD here. Home Depot. Let me pull up a 5-year. Yeah, I mean, this stock, you can go back to 21 and the stock is 400 plus. That's the thing with it's a tough thing with retail, man. It's where money goes to die in the stock market. It really is. It's tough. Unless you can get in and bottom feed these things. Like if you can get in a retailer like when just no one wants it, maybe you can make some money there. But man, I got to say it's tough to make money in retail stocks. It really is. That's one of the toughest areas of the market to make money. That and oil and gas stocks, that's another bunch.
Of AI, and then certain parts of healthcare like pharma.
I mean, you do like large parts of the market which still are going to somehow not deliver that robust of returns. That's interesting. So, right? I mean, you like these big groups, banks and tech and other areas that would fall into that category as well. What are the big risks to your outlook then?
So I would say the risks, the big one I would say is basically the Fed. If the Fed basically closes the door to future easing earlier rather than later, I do think that markets will have a bit of a hard time digesting that. And I think this, call it broadening out trade, I do think could hit a wall in a pretty hard way in that case. And you go back into a very, very narrow leadership. Energy sector is, for instance, one area that we think is becoming increasingly decoupled from weakening oil prices, and we think will be under downward pressure. And then there's pockets of staples, there's parts of industrials, there's other parts of financials outside of banks that we don't think necessarily fare well in this environment.